out in Jabulani, Soweto a little earlier on. We continue, of course, with our jobs focus with a little twist on the market picture. Of course, we've recently just seen the inversion of the US bond yields, and what that means is perhaps a sign of a global recession coming. A lot of fears coming through with regards to that, so markets have certainly been battered. Just some quick news as well to have come out today. South Africa's debt is becoming uncomfortable, but South Africa has not requested a bailout. That is the word from the International Monetary Fund. We're joined, of course, by Maudi Lentsoane, who is from Lehumo Capital, helping us unpack that market picture and a little bit of our job focus as well. Maudi, thank you so much for the time. This picture is dire. You've heard the words from Stephen Friedman, Zwelinzima Vavi, from Dr. Maudi Lentsoane as well. It's a dire situation.
No, it is. I mean, you know, we haven't grown. We haven't created any jobs in the past, 10 years. Yeah. And it's just been worse and worse, and to actually have to reach this level is just shocking. And even at I think the time when we were growing at about 4%, our unemployment was still above 20%. So if you look at it really, Arabile, is the fact that for us to really create a dent and go back to the figures that you were alluding to, and I think you had the list, some of the countries that are creating, that unemployment is below 10%. For us to get to that point, if we couldn't get there when we were growing at 4%, it's going to be a tough one. It tells you that we're dealing with something a lot more than just the economic growth. Yeah. We're dealing with a structural unemployment, and therefore we need to take care of those things to be able to actually even have a dent at this unemployment figure.
The former Statistician General coming out outright and saying we're just poor at planning. And that does seem to be the case, despite the fact that we've had an NDP plan. But if you come to look at how things are supposed to be next year, we're supposed to be at 14% unemployment. No, it's never going to happen.
Yeah, I mean, you just look at it, 25 years into this democracy, and if you get, and I get a lot of CVs, we get lots of CVs, and are written by 25-year-olds and 22-year-olds. And when I look at them and I say, this is a CV that's written, somebody who came after the democracy, who was born after democracy, it's a shocker. Just from a CV compilation, it's still shocking. How do you expect to get a job? So the quality of the education that we get, it's still poor. And this is 25 years after democracy. Sure. Really, it says a lot about how we planned.
Maudi, just 12 years ago, we had the bond inversion come through that pointed out that there would be a global recession. We had that happen again with the United States. And if our current job situation is dire and we have another global recession coming through, surely we're going to get into worse of a picture here.
Yeah, so it's not looking good. I mean, that bond market telling us that we are heading into a recession. And in fact, you mentioned 12 years ago. If you look at it in the past 60 years, I've looked at it going backwards. We've actually had the inversion happening 8 times. Yeah. And I think about 2/3 of that when we had a recession happening in the next 2 years. So if history is anything to go by, I think we are obviously heading into a serious trouble. And I mean, you can look at a number of things. It could be the trade war that we're talking about. If that's not resolved, then we're heading into a disaster. You had the numbers that came through from the likes of Germany not looking good.
Yeah, that economy going down.
You've still got Brexit as well, the uncertainty there. So I think there's a lot of really headwinds that the global economy is really going to encounter going forward. And this bond market is then telling a very worrying story there.
Yeah. Do you think it's the end of the bull run now?
Look, I think it's definitely market's going to find it very difficult to push higher. The only thing that could actually, manage to, hold us around this level is what the central banks have been doing. And I think, globally, we've seen the central banks come through, the ECB coming up, and I think in the next month we'll get to understand what sort of stimulus package they are going to unleash to try and support the economies. I think we are now on this artificial run, and we've been on it for a very long time. So for as long as they can continue to create support, and I think when you look at it, I think they can still support the market for the time being. Yeah. I think we could actually hover around this level for some time, but definitely in the absence of any intervention from those central banks, I think we are heading for a disaster.
So we really should be worried then, and I only ask that question or say that statement purely because the cycles come and go. We've had depressions before, we've had dire scenarios, we've had growth going into negatives for quite some time, and then we managed to pick up. But is this perhaps a little bit more worrying because the economic factors are a little more different? We don't have a trade surplus. We don't have a current account surplus. We don't have a budget surplus for that matter. All those things are negative as well.
No, it is. I think it's very worrying, and especially because we haven't had for the longest of time. What we have is the global economy is not moving it's not in sync.
Yeah.
You have some parts of the world growing because they've been able to inject some more liquidity into their systems because they could. Their central banks can print faster than others can.
Yeah.
And therefore this disconnect in the global GDP is what makes it so complex. When you've got US doing so well and you go to Europe is doing dismal, and you go to China. So we've got this disconnect that we're not moving in the same direction. That's what makes it very complex, and even complex to analyze.
Yeah, I mean, the likes of globalization perhaps haven't necessarily helped, even though it was meant to in some ways. Maudi, appreciate the time. Thank you so much for it. Maudi Lentsoane, they're joining us from Lehumo Capital, helping us unpack not just that market picture, but really how the global scenario currently looks. Are we headed for a global recession? Only time will tell, but we certainly are in the doldrums at present. After the break, we take a look at how the high unemployment rate is impacting on South Africans dependent on social grants. Do stay with us.